Rathi Wealth itself on our radar today. The stock trading higher after it exceeded the FY24 guidance both in terms of revenue and net profit. The management also expects a growth of around 20 to 25% going ahead. Feroze Azeez, who is the Deputy CEO, joins in to talk about the results. Feroze, thank you for joining in. Our quarterly meeting on the results, is different from what we do periodically about personal finance and wealth. This one's important because you've constantly been guiding for growth and you've been beating that expectation as well. 20 to 25% growth for FY25 is what we're going with. If you could tell us some more details about the fourth quarter itself. I mean, what were the issuances of MLDs and what is it that you're expecting in FY25?
Hello, Mangalam. Like you rightly pointed out, we meet on a quarterly basis. This one is a different meeting, not on markets or personal finance. But yeah, having said which, like you rightly identified, we are in the business of managing money, right? We're not in the business of selling cars or phones. When you're managing money, there's a huge moral responsibility of somebody's 20, 30 years of extra effort, which has resulted in some numbers on a piece of paper, which is called a portfolio. So we don't look at it quarterly. Because these are not this is not a business where you're trying to generate revenue. You're trying to manage clients, and revenue is an outcome, and in turn, PAT is an outcome. So I will not get into the numbers of structure product kitna, mutual fund kitna, because conceptually we have had this DNA of undercommitting over delivery. So we had guided 205 crores of PAT. We revised that in December to 220, and we ended up at 226, 227, 6.5. That's point one. Point two, we had guided revenue numbers that is also exceeded. We revised it, and again that got exceeded. But the more important point is the assets under management. Also, we had guided last year around. We had fallen short by about 1,000 crores on our guidance of assets under management because the markets were flat and we didn't get any mark to market. That got reversed in the last year. So we reached about 59,000 crores. We had guided 47,000. We revised that to 55 and that's become 59. So what's happy situation for us is we are trying to create a business which is market agnostic in financial services. And that's what, when I see a quarter like a December quarter where Nifty had fallen to 8,000, 18,600, 700 in the expiry of October, if that quarter, if clients give us more money, we feel more happy because the clients are trusting you more in bad times. That's where the bad times helps you distinguish between a good distributor and a bad one. So to answer your pointed question, the year went by beautifully, and we will continue our growth and guide always lesser than what we personally believe is expected over the year.
Hi, Feroze. Always good to see you in. And, just to revise for the benefit of our viewers, the guidance that you're giving us for FY25 is revenue number of around 910 crores, I think so. PAT number of around 280 crores and AUM of around 72,000 crores, right?
Yes, Nigel Sahab, you're always very sharp with your numbers. Thanks. In fact, you know my numbers better than I do.
No, just want to reiterate that for the benefit of our viewers, Feroze. Well, trail revenue as a percentage of your total revenues, well, that's been inching up, which gives you a sense of, maybe predictability or maybe stability as well, if you'd like to call it that. How does this number shape up? In quarter four, it's gone up to around 43%, which compares with around 39% on a sequential basis. For the year, where do you see this number stabilize at, or you're happy with the current contribution?
No, we're not happy with the current contribution. Whatever we say, we try and calibrate when we say to a shareholder or a client. We had said that our aspiration is to bring it to 50-50, 50 trail, 50 upfront. And that's what we are inching towards. And if God is kind, we'll get there. But we believe that when you make a statement, then you have to put your professional best to get there. And I think a larger growth in the trail revenue implies that you're inching on that gap and closing it and narrowing it. That's point one. Point two, from a third-party perspective, predictability, only answer to predictability is trade revenue for a shareholder or an analyst. But from where we see it, our business is very predictable because even a structured product business, 80% of the money gets reinvested. So if I sell a structured product to a client, if that matures after 5 years, double the money, and minus the tax gets reinvested more or less. So for me, there is predictability, not just in trail revenue, there is predictability in the upfront revenue as well. But for an outsider, he's going to take it with a pinch of salt, but that's his choice or her choice.
All right, so 50-50 is what you are targeting going forward. But as of now, It's a little less than that in favor of trail. Irrespective, you have predictability in your revenues. Feroze, I wanted your thoughts on three things. One was your client addition. At what rate are you looking to add clients? You had said earlier that your internal target would be close to around 200, 250 per quarter. Secondly, your, RMs that you've added, because of them having been added recently, your employee cost as a percentage of sales has increased. So at what level does it normalize? And thirdly, what is the shift from, regular RMs to mature RMs that you're foreseeing going forward? And at what AUM per RM, if you have to, is the target there?
That's a lot of questions, Mangalam, intertwined. I'll try and not dodge any of them incidentally, because all of them are very, very interesting questions. Point one, from an RM standpoint, the number of clients we like to add, in fact, our aspiration has been 200 clients net addition per month. That's been our aspiration. And in fact, our not a guidance at all. Our aspiration is to get to one new client per RM per month. That's 330. That's our aspiration. It's a dream. We've not been able to achieve that for 6-7 years, but I'm just slating the internal target, which is there in the heart. That's point one. Point two, we have this habit of training people, and RMs, our account managers, are a very big force, which is almost 360, 370 people whom we are training for the last 1, 2, 3 years to promote as RMs. So the RM addition, so you will almost know 80 out of your 100 RMs already of the next 2 years, which is a very predictable model because I know the names and I've worked with them for 2-3 years. I'm not just surgically hiring them from another company. Third, we don't have a leaking bucket. This is the third consecutive quarter where I don't have one regret attrition of an RM. That's because we all have attached ourselves to one objective, which is client benefit. And our family's life also depends on that. So point I'm trying to make is it's going to go unnoticed. But 9 months of zero regret attrition when people are being given offers of twice their salaries, there's something else more than money which attaches people and their passions and their duties towards Anand Rathi and its clients rather than just money. So otherwise, in a business like ours, where people move from one company to another 2-3 years. So the reason why I'm saying that is because the number of matured RMs will depend on not having a leaking bucket. So if I remember the number right, there are 30-40 RMs have got added to 5-year plus bucket on a base of 135. 135 has gone to 165, 168 people who have finished 5 years, because the biggest disservice to a client in this business is a change of an RM. It is so unfortunate if I make a client change the face whom he has seen for 6-7 years. So we don't want to pain the client of acclimatizing himself to a new professional. That's why we take care of our colleagues. That results in lower attrition, that results in client satisfaction, that results in references, and his money being managed more efficiently.
Okay, all right. So the number of RMs, as you said, is 330 odd, right? 332, I think, to be precise.
Yes, sir.
All right. And in the last year, the new clients that you added were around 1,559. This year, you're saying the aspiration is 200 per month. So in all probability, it'll be at least in that vicinity of around 2,000, 2,400 odd.
Correct, Nigel. That's an aspiration, so not a guidance.
Got it. Digital wealth business, that's seeing some bit of a growth. I think currently the AUM is I think, around 1,500 crores approximately. How big can this get?
See, this business can get very, very big if you crack the code. And if you keep client as the epicenter, the biggest problem to solve, which I think the technology businesses who are in this space are not trying to solve, is hand-holding during bad times. Technology cannot make a call to you and say, relax, don't exit. What is happening in the mutual fund industry, if I look at it as a proxy of the client behavior, if you look at the non-SIP number, if you look at the mutual fund net flows are negative if you remove the SIP purchases. That means lump sum purchase minus lump sum redemption for this kind of a financial year is negative. If I remember the number right, negative 15,000 crores. That means if SIPs were not to be there, purchases in the form of SIPs were not there, lump sum purchase minus lump sum redemption is negative 15,000 crores. So technology business needs to crack this code when in October 23, when Nifty goes to 18,700, who is going to hold the hand of the client? And not let him sell at troughs. Otherwise, client is always going to sell at troughs, buy at peaks. So that is what we are trying to solve. Unless we solve that, I will not comment on its growth. They are bootstrap businesses. They will earn money. But unless you have got that secret recipe, it's not a business which we will want to project as any profitability, which is large enough for a shareholder to discount and get some eternal value to.
All right, Feroze, thanks a lot for joining in. Quickly, before we let you go, just a one-word answer, bookkeeping. Promoters are participating in the buyback, right?
So I don't think we've clarified that yet.
Which is what we wanted clarity on.
I would not be able to comment on that because the promoter has decision making, and I have not.
All right, take that point. Thank you so much for joining in. Wish you good luck for FY25. Anand Rathi, good performance coming in. The company says that it is guiding for lesser growth than what it believes it can do, which means that under promise and over deliver. That's the stock up at up around 5% at the high point of trade.